Question 1. Which of the following is the most significant factor in determining whether an insurance policy is underwritten favorably for? A property risk. A. The applicant's past insurance claims history. B. The location of the property and its exposure to natural disasters. C. The applicant's credit score and financial history. D. The property's market value and replacement cost. Answer. B. The location of the property and its exposure to natural disasters. Explanation. In underwriting property insurance, one of the most significant factors is assessing the risk associated with the property's location, particularly its exposure to natural disasters such as floods, earthquakes, or wildfires. Property located in an area prone to natural disasters will typically be subject to higher premiums or exclusions. This is in line with the principle risk assessment and risk management, which are central to underwriting. Factors such as claims history, credit score, and market value are also important, but location and natural hazards typically weigh more heavily in determining whether the risk is acceptable or not. Question 2. Scenario question. Mr. Williams, a commercial property owner, is seeking to purchase an insurance policy for his office building in downtown Cheyenne, Wyoming. The building has been retrofitted to withstand high winds and other hazards, but it has recently been involved in a lawsuit where the city claims the building is an environmental hazard due to poor waste management practices. The insurer is assessing whether to accept or reject the risk. Based Wyoming underwriting guidelines. What should the insurer consider most when making the decision? A. The potential for future lawsuits due to environmental concerns. B. The building's ability to withstand high winds as part of risk mitigation. C. The building's market value and current condition. D. The applicant's previous claims history for the last 5 years. Answer. A. The potential for future lawsuits due to environmental concerns. Explanation. In Wyoming, underwriting for commercial properties must take into account any legal issues or risks that may significantly affect the property in the future. Environmental hazards, such as waste management issues that may lead to lawsuits, are a serious consideration for insurers as they could result in large claims. Even though the building has undergone retrofitting for high winds, environmental concerns can lead to ongoing liability risks, potentially causing the insurer to reject the application or demand higher premiums. Insurers must prioritize the long-term potential for loss, including legal risks in line with risk selection and evaluation practices. Question 3. Which of the following best explains the role of reinsurance in the underwriting process? A. Reinsurance serves only as a backup plan for the insurer in the event of extreme financial losses. B. Reinsurance allows the insurer to transfer risk to another company, thereby reducing the total exposure on a policy. C. Reinsurance is primarily used for underwriting policies in niche markets, such as marine or aviation. D. Reinsurance is used solely to ensure compliance with state regulations regarding premium rates. Answer. B. Reinsurance allows the insurer to transfer risk to another company, thereby reducing the total exposure on a policy. Explanation. Reinsurance plays a critical role in the underwriting process by allowing the insurer to transfer a portion of the risk they assume on policies to another company. This helps reduce the insurer's overall exposure and protects against catastrophic losses. The insurer may purchase reinsurance to cover certain type risks, such as large commercial policies, or to limit their liability on policies in high-risk areas. Reinsurance is not simply a backup plan or niche market tool. It is an essential part of managing risk and underwriting effectively. Question 4. Which of the following best describes the principle of indemnity in insurance? A. The insurer guarantees that the policyholder will make a profit from a covered loss. B. The insurer compensates the policyholder only for the actual financial loss, not more. C. The policyholder is entitled to receive a fixed amount of compensation for any loss, regardless of the circumstances. D. The insurer covers both the policyholder's direct losses and any indirect damages from the incident. Answer. B. The insurer compensates the policyholder only for the actual financial loss, not more. Explanation. The principle of indemnity ensures that insurance only compensates the policyholder for their actual financial loss up to the policy's limit without allowing the insured to profit from the claim. This principle is central to insurance as it prevents overcompensation or moral hazard. Insurers base their payouts on the actual value rather than providing fixed sum regardless of the situation. Question 5. Which of the following is a primary factor in assessing the risk of insuring? A health insurance policy. A. The applicant's age and overall health condition. B. The applicant's employment status and income. C. The applicant's geographical location and local healthcare access. D. The applicant's credit score and previous claims history. Answer A. The applicant's age and overall health condition. Explanation. In underwriting health insurance, the applicant's age and overall health condition are the most significant factors. Health insurers assess the likelihood of future medical costs based on the applicant's current health status and age, as these are strong predictors of healthcare usage and costs. Younger individuals with fewer health conditions generally represent lower risks, while individuals or those with chronic illnesses may be seen as higher risks, which impacts the underwriting decision. Question 6. Scenario question. MS. Parker is seeking to purchase commercial property insurance for her retail business in Casper, Wyoming. The building is well maintained and equipped with modern fire suppression systems, but the location is near a river, which increases the potential risk of flooding. The insurer is considering whether to approve the policy. What is the most important underwriting factor the insurer should consider in this situation? A. The property's proximity to emergency services and evacuation routes. B. The building's current market value and any outstanding mortgage. C. The potential risk of flooding due to the building's location near the river. D. The owner's credit history and financial standing. Answer. C. The potential risk of flooding due to the building's location near the river. Explanation. In underwriting property insurance, one of the primary concerns is evaluating environmental risks, particularly flooding, which can result in significant claims. Since the property is near a river, the insurer must assess the potential flood risk and whether the building has sufficient mitigation measures in place. Even though the building is well maintained with fire suppression systems, flood risk may warrant additional premium charges or exclusions in accordance with flood insurance guidelines. The building's location is critical in this case. Question 7. Which of the following best defines the concept of moral hazard in insurance underwriting? A. The increased risk that arises when the insured engages in high-risk behavior after obtaining insurance coverage. B. The risk of loss arising from a sudden unforeseen event such as a natural disaster. C. The tendency for policyholders to make fraudulent claims based on the nature of their financial situation. D. The possibility of catastrophic loss due to a lack of risk diversification by the insurer. Answer A. The increased risk that arises when the insured engages in high-risk behavior after obtaining insurance coverage. Explanation. Moral hazard refers to the increased likelihood of risk or loss when an individual or entity behaves in a riskier manner because they have insurance coverage. For example, after acquiring insurance, a policyholder might take more risks because they know their insurance will cover the losses. This concept is crucial as insurers seek to avoid such behaviors by carefully evaluating applicants and setting proper terms in the policy. Question 8. What is the primary purpose of an insurance underwriting policy? A. To ensure all policyholders receive equal compensation regardless of risk. B. To establish clear criteria for determining acceptable and uninsurable risks. C. To maximize profits by issuing as many policies as possible. D. To guarantee that every insurance claim is paid regardless of the risk involved. Answer. B. To establish clear criteria for determining acceptable and uninsurable risks. Explanation. The purpose of an underwriting policy is to establish guidelines and criteria for assessing and selecting risks. The insurer needs to determine whether a risk is insurable based on factors like the applicant's history, risk factors, and the type of coverage requested. By following a structured underwriting policy, insurers can maintain profitability and avoid taking on excessive or unmanageable risks. Question 9. Which of the following is most likely to lead to an underwriting decision being reconsidered or denied in a property insurance application? A. The applicant's property is located in flood-prone zone without flood insurance coverage. B. The applicant has made no prior insurance claims in the past 10 years. C. The property has market value higher than the policy limit requested. D. The applicant has good credit score and strong financial standing. Answer A. The applicant's property is located in flood-prone zone without flood insurance coverage. Explanation. Properties located in flood-prone areas present significant risk to insurers, particularly if the property is not covered by flood insurance. In such cases, insurers are likely to reconsider or deny the underwriting decision due to the high likelihood of claim. This decision follows flood risk assessment and underwriting guidelines that aim to mitigate potential catastrophic losses from floods. Question 10. Which of the following best explains the role of the experience rating in underwriting property and casualty insurance? A experience rating adjusts premiums based on the insurer's past performance in managing claims. B. Experience rating is based on the individual policyholder's past claims history, adjusting premiums accordingly. C. Experience rating is determined by the market conditions and competitor pricing in the area. D. Experience rating applies only to life insurance policies where mortality rates are the primary concern. Answer: B. Experience rating is based on the individual policyholder's past claims history, adjusting premiums accordingly. Explanation: experience rating is a system where the insurer adjusts the premiums for policyholder based on their individual claims history. If policyholder has filed frequent claims in the past, they are likely to pay higher premiums because they represent higher risk to the insurer. This system allows insurers to more reflect the risk associated with each policyholder in line with principles of underwriting and risk management. Question 11. Which of the following is most likely to influence an insurer's decision to underwrite commercial property insurance policy? A. The property's distance from fire station. B. The policyholder's previous personal auto insurance history. C. The business's total annual revenue. D. The credit score of the business owner. Answer A. The property's distance from fire station. Explanation: the proximity of commercial property to fire station is an important factor in underwriting property insurance. Properties located farther from fire stations may experience delayed response times in the event of fire, thus increasing the risk to the insurer. This is a key element in risk assessment, as the quicker the response to fire, the less likely the property will sustain significant damage. Question 12. Which of the following risk classification methods is most commonly used by insurance companies to group risks based on shared characteristics? A. Underwriting guidelines. B. Statistical modeling. C. Rating classes. D. Claims history evaluation. Answer: C. Rating classes. Explanation: insurance companies group risks into different rating classes based on common characteristics that influence the level of risk they pose. These can include factors such as the type of business, location, size, and risk history. This helps insurers to assign appropriate premiums based on the level of risk posed by each policyholder. Question 13. Scenario question. Mr. Thompson is applying for a life insurance policy. He has a history of heart disease but is in relatively good health at present. The insurer has a specific underwriting guideline that discourages approving life insurance applications for individuals with any serious pre-existing heart conditions. What is the most likely action the underwriter will take? A. The underwriter will approve the policy with a standard premium rate. B. The underwriter will approve the policy but impose higher premiums due to the pre-existing condition. C. The underwriter will deny the application outright, regardless of Mr. Thompson's current health. D. The underwriter will approve the policy without reviewing the applicant's medical history. Answer: B. The underwriter will approve the policy but impose higher premiums due to the pre-existing condition. Explanation: underwriters often approve life insurance policies for individuals with pre-existing conditions, but they may impose higher premiums to account for the increased risk associated with those conditions. In Mr. Thompson's case, his history of heart disease would typically result in higher premiums, but the policy would not be automatically unless the condition was severe enough to warrant it. Question 14. Which of the following would most likely be excluded from coverage under a standard homeowner's insurance policy? A. Theft of personal property from the home. B. Damage from a fire caused by an electrical malfunction. C. Water damage from an overflow of the bathtub. D. Damage from flooding caused by a hurricane. Answer: D. Damage from flooding caused by a hurricane. Explanation: flood damage, even if caused by a natural disaster like a hurricane, is typically excluded from standard homeowners insurance policies. Homeowners must purchase separate flood insurance to cover such risks. The exclusion is based on the high cost of flood-related claims and the frequency of such events, making it difficult for insurers to offer it as part of standard coverage. Question 15. Which of the following is a key factor in determining the appropriate premium for property insurance under an experience rating system? A. The overall risk exposure in the geographical region. B. The applicant's past claims experience. C. The applicant's credit score. D. The type of insurance policy purchased. Answer: B. The applicant's past Claims experience. Explanation. Experience rating is based on the applicant's claims history. If policyholder has filed frequent claims in the past, they represent higher risk, and as a result, their premiums will be adjusted accordingly. This method rewards low-risk individuals with lower premiums and penalizes high-risk individuals for their history of claims. Question 16. Which of the following underwriting principles is most likely to be violated if an insurer denies a claim based on the applicant's race or ethnicity? A. Principle of utmost good faith. B. Principle of indemnity. C. Principle of fairness and non-discrimination. D. Principle of insurable interest. Answer. C. Principle of fairness and non-discrimination. Explanation. Insurance underwriting must be based on objective, non-discriminatory factors. Discriminating against an applicant based on their race or ethnicity violates the principle of fairness and non-discrimination, which requires that all applicants be treated equally, regardless of characteristics that do not relate to risk. Question 17. What is the primary purpose of an insurer's loss control program in the underwriting process? A. To increase the amount of coverage policyholder can purchase. B. To reduce the potential frequency and severity of claims by implementing preventive measures. C. To reduce the amount of premium income for the insurer. D. To offer policyholders discounts based on their personal history. Answer. B. To reduce the potential frequency and severity of claims by implementing preventive measures. Explanation. Loss control programs are designed to mitigate risks by reducing the frequency and severity of potential claims. For example, an insurer may encourage policyholders to install fire alarms, security systems, or improve safety protocols in order to lower the likelihood of claims. These programs help protect the insurer's bottom by reducing payouts over time. Question 18. Which of the following is a key element in underwriting health insurance policies? A. The policyholder's occupation and job risks. B. The policyholder's income and financial status. C. The policyholder's credit score and payment history. D. The policyholder's health status and medical history. Answer. D. The policyholder's health status and medical history. Explanation. Health insurers assess an applicant's medical history and health status as key factor in underwriting decisions. Pre-existing conditions, current health conditions, and overall health are used to assess the potential future healthcare costs for the insurer. Individuals with chronic health conditions may be deemed higher risk and thus face higher premiums. Question 19. Which of the following best describes the underwriting process for life insurance policies? A. Life insurance underwriting is based entirely on the applicant's credit history. B. Life insurance underwriting evaluates both the applicant's financial needs and their health history. C. Life insurance underwriting is based on the applicant's job position and employment status. D. Life insurance underwriting only considers the applicant's age and gender. Answer. B. Life insurance underwriting evaluates both the applicant's financial needs and their health history. Explanation. In life insurance underwriting, both the applicant's health history and financial needs are taken into account. Health history helps the insurer assess the likelihood of the applicant passing away prematurely, while the financial assessment ensures that the policy's coverage amount is appropriate based on the applicant's dependents and financial situation. Question 20. What is the primary risk assessment tool used by underwriters in determining the price of commercial property insurance? A. Loss experience analysis. B. The building's market value. C. The applicant's credit score. D. The risk of theft and vandalism. Answer. A. Loss experience analysis. Explanation. Loss experience analysis is the primary tool used by underwriters to assess the risk associated with insuring a commercial property. This analysis looks at the property's history of claims to determine how likely it is that claim will be made in the future. Properties with history of frequent or severe claims will be considered higher risk and thus priced accordingly. Question 21. Which of the following is most likely to be considered a moral hazard in underwriting commercial liability insurance? A. The business owner installs additional security measures to prevent theft. B. The business owner has a history of submitting false claims for property damage. C. The business owner frequently conducts training on safety protocols for employees. D. The business owner has no prior claims experience. Answer. B. The business owner has A history of submitting false claims for property damage. Explanation: moral hazard refers to situations where the insured party engages in riskier behavior due to the presence of insurance coverage. In this case, the business owner's history of submitting false claims suggests that they might be more inclined to file fraudulent claims in the future, which presents higher moral hazard to the insurer. Question 22. Which of the following would be considered a physical hazard in insurance underwriting? A. The insured's poor credit history. B. The insured's location in flood-prone area. C. The insured's lack of proper fire suppression systems in the building. D. The insured's unethical behavior in submitting claims. Answer: C. The insured's lack of proper fire suppression systems in the building. Explanation: physical hazard is a condition that increases the likelihood of loss due to physical factors. In this case, the absence of proper fire suppression systems in building increases the risk of fire and is considered physical hazard. This factor would be taken into account by the underwriter when evaluating the risk of insuring the property. Question 23. Which of the following is typically covered under a standard commercial general liability (CGL) policy? A. Employee injuries while working on the job. B. Damage to the insured's own property. C. Bodily injury caused by the insured's products. D. Losses due to flood damage. Answer: C. Bodily injury caused by the insured's products. Explanation: the standard commercial general liability policy typically covers bodily injury and property damage caused by the insured's products. This is an important coverage for businesses that manufacture, distribute, or sell products, as it protects them from claims made by third parties who suffer injuries or damages from those products. Question 24. Which of the following statements about workers' compensation insurance is true? A. Workers' compensation insurance only covers employees who are injured on the job during working hours. B. Workers' compensation insurance provides coverage for employees' injuries regardless of who is at fault. C. Workers' compensation insurance excludes any injuries sustained while traveling for work. D. Workers' compensation insurance only covers medical expenses, not lost wages. Answer: B. Workers' compensation insurance provides coverage for employees' injuries regardless of who is at fault. Explanation: workers' compensation insurance is a no-fault system designed to provide benefits to employees who are injured or become ill as a result of their job, regardless of who is at fault. This coverage typically includes medical expenses, lost wages, and rehabilitation costs. The goal is to provide prompt and fair compensation, limiting lawsuits between employers and employees. Question 25. Which of the following is not a type of moral hazard? A. A policyholder increases the level of coverage to obtain higher benefits. B. A policyholder neglects safety measures because they know they are insured. C. A policyholder intentionally misrepresents facts during the underwriting process. D. A policyholder engages in high-risk activities because they have insurance coverage. Answer A. A policyholder increases the level of coverage to obtain higher benefits. Explanation: increasing the level of coverage to obtain higher benefits is not typically considered a moral hazard. A moral hazard occurs when the insured party takes on additional risks or engages in undesirable behavior because they are covered by insurance. The other options involve behaviors that are more clearly aligned with moral hazards, such as neglecting safety or misrepresenting facts. Question 26. Which of the following factors is considered when determining the premium for commercial automobile insurance? A. The number of vehicles in the fleet. B. The color of the vehicle. C. The vehicle's resale value. D. The insured's personal driving record. Answer A. The number of vehicles in the fleet. Explanation: in commercial automobile insurance, premiums are often influenced by the number of vehicles in the insured's fleet. A larger fleet typically indicates a higher level of risk due to the increased number of vehicles on the road. Other factors, such as the type of vehicles, their usage, and the driving records of employees, also play a role in determining the premium. Question 27. What type of insurance is typically used to cover the cost of lawsuits and legal defense for businesses? A. Commercial property insurance. B. Commercial liability insurance. C. Health insurance. D. Life insurance. Answer: B. Commercial liability insurance. Explanation: commercial liability insurance protects businesses from the financial burden of lawsuits and legal defense costs. This coverage includes claims for bodily injury, property damage, and personal injury caused by the business's operations, products, or services. It helps businesses cover the costs of legal defense and any settlements or judgments resulting from lawsuit. Question 20. Scenario question. Zeiss Corporation has a commercial auto insurance policy that includes a $500,000 liability limit. One of their drivers is involved in an accident that causes $600,000 in damage. How will the insurer handle the claim? A. The insurer will cover the full $600,000 since it is a commercial auto insurance policy. B. The insurer will cover the first $500,000 and the remaining $100,000 will be the responsibility of Zeiss Corporation. C. The insurer will deny the claim because the damage exceeds the policy limit. D. The insurer will increase the coverage limit to cover the entire $600,000. Answer: B. The insurer will cover the first $500,000 and the remaining $100,000 will be the responsibility of Zeiss Corporation. Explanation: commercial auto insurance policies have coverage limits that dictate the maximum amount the insurer will pay for a claim. In this case, the policy limit is $500,000, which means the insurer will cover that amount and Zeiss Corporation will be responsible for the remaining $100,000. This demonstrates the importance of ensuring adequate coverage to avoid gaps in protection. Question 29. Which of the following is an example of a peril typically covered by a standard homeowner's insurance policy? A. Damage from an earthquake. B. Damage from a flood. C. Damage from a fire. D. Damage from civil unrest or vandalism. Answer: C. Damage from a fire. Explanation: standard homeowners insurance typically covers damage caused by a variety of perils, including fire, theft, vandalism, and vandalism. However, certain perils, such as earthquakes and floods, are often excluded and require separate policies or endorsements. Homeowners must assess their risk and consider additional coverage for excluded perils. Question 30. Which of the following is most likely to influence the underwriting of a life insurance policy? A. The policyholder's occupation and job risks. B. The policyholder's credit score. C. The policyholder's level of physical activity. D. The policyholder's marital status. Answer A. The policyholder's occupation and job risks. Explanation: life insurance underwriting often takes the policyholder's occupation into account, especially if the job involves high-risk activities such as working in construction or with dangerous machinery. This is because high-risk occupations may lead to higher likelihood of premature death, which increases the insurer's risk. Other factors such as credit score or marital status are typically less influential in the underwriting process.